What's up guys, welcome back to the channel. So in today's video we'll be talking about top-down analysis. Top-down analysis is a crucial part of every trading strategy. So what is top-down analysis? Top-down analysis is simply being able to read price action across different time frames. Not only trying to read the price action across different time frames, but reading and understanding the price action across different time frames. So that is what we call top-down analysis. And trying to read price action across different time frames, we have to do it in a descending order and not in an ascending order. So we will actually get to that as we continue in this lesson today. So pay attention to this video and I hope you get value before the end of today's video. So why is top-down analysis very important? I'll give you an illustration to tell you why top-down analysis is very important. Reading price action across different time frames, understanding where you are and where you are trying to trade from, why it's very important to understand them. So let me give you this simple illustration. Let's say in a situation we see price forming series of higher highs and higher lows. Okay, so when you see this, you understand that price is simply in an uptrend. So let's say this is our 1 hour time frame. This black line right here, this is our 1 hour time frame, and we see price breaking highs, mitigating a zone. Okay, price mitigates a zone, it breaks another high, comes, mitigates some kind of zone, and price breaks this most recent high. So now that price breaks the most recent high, what is our expectation? Our expectation is that normally we have a zone right here, and now we are expecting price to pull back and continue, and this is exactly what is happening on the 1 hour time frame. Now let's say in a situation we move to the daily time frame and we see price forms a low. Here is the pullback. So this is the continuation to the downside, and this is a break of structure to the downside. So I have to change this color to red so you understand that the red line is your daily time frame. Remember, the black line we have here, this is the 1 hour time frame, and the red line here is our daily time frame. So on the daily time frame, price break structure to the downside, and we have a supply zone right here. We have a supply zone, but on the 1 hour time frame, price is in an uptrend, and right now price is in our demand zone. So my question right now is, will you look to trade from this lower time frame demand zone here? The answer is no. Why? Because you know that price we actually respect these higher time frame points of interest, so you won't be looking to trade from this zone right here. Instead, even if you trade from this zone, you might get a reaction, and now you see price pushing and continue moving to the downside. So you see why understanding price action across different time frame is really important, because if you were actually focusing on this 1 hour price charts, this black line right here, you will still be looking for your longs. But if you actually included your analysis looking from the daily time frame, and you understand that price is actually at a higher time frame point of interest, you won't look to long the market again. Instead, you'll be looking to go short. Okay, so this is why you need to understand top-down analysis. So before we actually go into top-down analysis and how it's been done, I will like to give you 2 important things you need to know before you can actually start to do a top-down analysis. And what is the first thing you need to understand? The first thing you need to understand is different time frames. And if you look right here, we have different time frames right here, starting from the 1 second time frame down to we even have 12 months, and we have a lot of time frames right here. The ones you see that I start right here are my favorite time frames, and you can see how they are all lined up over here. So firstly, you need to understand the time frames, and as a trader, once you understand different time frames, the next thing you need to understand is the type of trader you are. You need to understand if you are a scalper, if you are an intraday trader, or if you are a swing trader. So let's say in a situation that you are a scalper, you scalp trades, you look to trade within few minutes, you are out of the market, you have no business with the monthly time frame. Okay, so if you are a swing trader, you hold your trade for weeks and for days, you have no business with the seconds time frame. Okay, so I want to give you these few tips before I start explaining. Let's say you are a scalper, you need 3 major time frames which you'll be looking at. Okay, you need 3 major time frames. So I'll give you my suggestion, and after my suggestion you can go to the price chart practice and see the best time frames for yourself. Okay, one thing you need to understand is you need 3 major time frames. Okay, so no matter what you trade, no matter the type of trader you are, you need 3 major time frames. And what are the major time frames? You need the higher time frame, you need your medium time frame, and you need your lower time frame. So what will you be looking for at the higher time frame? At the higher time frame, you'll be looking to see the whole structure. You try to read market structure on the higher time frame. Secondly, you move to your medium time frames. That's where you map out your zones. Okay, so once you map out your zones on the medium time frame, you still try to identify your medium time frame structure, and your lower time frame is where you look for your entries if you necessarily need to trade with an entry confirmations. Okay, so that's the 3 major time frames you need. Now, as a scalper, like I said, you need 3 major time frames. And what do you need as your higher time frame if you are a scalper? So a scalper, you need the 1 hour time frame as your higher time frame. So you'll be looking for your bias on the higher time frame. Now, if you're looking to map out your zones, your points of interest where you'll be trading from, as a scalper, you need the 15 minutes time frame. So you still identify the 15-minute structure and try to understand what price is actually doing on the 15 minutes time frame. Now, if you want to look for your entry as a scalper, you go down to your 5 minutes time frame, and you can equally consider the 1 minute time frame. Now, if you are an intraday trader, maybe you hold your trade for 1 full day and you are off. You don't trade for a few minutes, you trade for a few hours in a single day. So these are the list of time frames you should look at. Firstly, your higher time frame should be your daily time frame. Look for your bias on the daily time frame. See the direction of the daily time frame. That you go down to your 2 hours or your 4 hours time frame. That's where you look for the structure, understand what the market structure is saying on the 2 hours time frame and on the 4 hours time frame. Then you can equally map out your zones there. Now, if you want to take your entry confirmations, you need confirmations to enter a trade. You can go down to your 30 minutes time frame or the 15 minutes time frame. You can look for your entry at those areas. So if you are a swing trader, you look to hold your trades for weeks, for months. Here are the time frames you need to consider. Firstly, you need to consider the monthly time frame to see where price is heading to. Then you go down to your weekly time frame. Okay, you go down to the weekly time frame or the daily time frame to map out the structure of the market and your points of interest. Now, where you will be looking for your entry confirmations or try to find an entry is on your 4 hours time frame. Okay, so this is it for different type of traders. I hope you know the type of trader you are. You know if you're a swing trader, a scalper, or an intraday trader. Now I've given you the list of time frames. So we do a top-down analysis in a descending order. Doing it in a descending order means that we'll be going from the higher time frame. After looking at the higher time frame, we come to our medium time frame, and then we go to our lower time frame. We don't do it in a descending order. Descending order means going from lower time frame to medium time frame to higher time frame. We don't do it that way. Instead, we go in a descending order. So you look at your higher time frame first, then secondly you look at your medium time frame before going down to your lower time frame. Okay, so let's do a simple top-down analysis. Today's lesson has 2 areas which I'll be touching today. The first thing I'll be talking about today is how to catch trend reversal. Okay, doing top-down analysis and trying to know when the trend is about to reverse. And secondly, and the most important thing which I know you all are here to look for, is how you can get a trading setup by doing top-down analysis. So you need to understand the first one, which is how to catch trend reversal, before you can know how to get trading opportunities by understanding top-down analysis. So the first thing is trying to catch trend reversal. So let's say in a situation we see price, this is our higher time frame. Remember, the red is our higher time frame and the black is our medium time frame. So let's say in a situation, this is our higher time frame. We see price form a low, pull back, a continuation, and here's the pullback, and now here is the continuation. So if you look at this, we all understand that price is doing what? Price is in a downtrend when you look at price at the higher time frame. Okay, so if you're looking at price at the higher time frame, you will understand that price is in a downtrend. But now when you go to the medium time frame, so there is something I need you to note before I continue explaining. So what I need you to note is that you see this push and the pullback, which is on the higher time frame. Okay, this push to the downside and the pullback, which you see on the higher time frame. When you go to the lower time frame, this is a trend on the lower time frame. Okay, so this push to the downside and the pullback right here, this is a trend when you go to your medium time frame. And what does that look like? So let's go to our medium time frame right now, and let me show you what you are likely to see when you go to your medium time frame. So I have to change the color back to black. So let's say this is our medium time frame. Okay, this push and the pullback, you will see it's a trend on the medium time frame, and this is what you are likely to see when you go to your medium time frame. Okay, you will see price trending on your medium time frame, and this is exactly what you need to understand. So what can you see on the higher time frame? Price forms a low, a pullback, and a continuation to the downside. But when you go to your medium time frame, what are you going to see? You see price forms a low, breaks structure to the downside, and you can see over here this is in line with the overall market structure. Okay, what you can see on the medium time frame is in line with the higher time frame bias. The medium time frame is in a downtrend and the higher time frame is equally in a downtrend. So trading with the trend right here is the best thing to do, because both the medium time frame and the higher time frame is the downtrend. So on the medium time frame, you see price breaking structures to the downside and it continues in line with the higher time frame. Now if you want to catch a trend reversal, how is it done? So how we can actually catch a trend reversal? So let's say in a case price broke structure. So let me complete the drawing. So let's say price broke structure to the downside. So now that you see this break of structure on the higher time frame, your expectation is that we're going to have a pullback before a new break of structure to the downside. So if you want to catch a trend reversal, if you want to catch the trend as price is about to break structure, what you need to do is go down to your medium time frame and start to look for a change of character. And if you can look closely, price was breaking structures to the downside, and if you look at your medium time frame, we have a change of character right here. You see price breaks a low and price moves to the upside and breaks a high. So this is your change of character. Now you see price coming back and you see price change direction. Price starts to trend on the medium time frame. Okay, the trend of price change on the medium time frame, but if you check on the higher time frame, what we are having here is a normal pullback. But on the lower time frame, which is a medium, let's say on the medium time frame, price has changed trend. So that is why when someone said to me that price is in a downtrend, the question I usually ask is on which time frame, because we have different trends on different time frames. The trend you see on the higher time frame is not the trend you see on the medium time frame, and the trend you see on the medium time frame is not what you're going to see on the lower time frame. So you can see this pullback right here on the higher time frame. This is a trend on the lower time frame. So let's say in a case you see price pulling back, maybe price mitigates a higher time frame point of interest, and you want to catch the trend reversal on the medium time frame. You see the higher time frame hits a point of interest and you want to catch the trend reversal on the medium time frame. What you should simply do is you should wait for a change of character. So you can see over here price breaks a high. After price breaks a high, it pulls back and it breaks a low. So now that price breaks a low, what are we seeing? We see price change direction, and we equally see price continues to the downside. So we see another change of character. Then we look to catch this pullback, which is a trend on the lower time frame. Okay, so this is it, and I hope you understand exactly what I just explained right here. I know I tried as much as I can to break it down to your understanding. So remember, I said today's lesson has two parts. The first one is trying to catch trend reversal, and now we'll be moving to the main topic while you are here: how to catch trading setup, or how to get trading setups while doing top-down analysis. So if you want to catch a trading opportunity, or you want to get a trading opportunity while doing a top-down analysis, the first thing you need to do, like I've always said, is to go to your higher time frame and see what price is doing on the higher time frame. Okay, you have to go to the higher time frame, look at the price action on the higher time frame, and understand what price is doing on the higher time frame. Now in this case, we have a break of structure to the upside, and you can actually go down to your lower time frame. This is your higher time frame. Now we are having a pullback. So now that we're having a pullback on the higher time frame, you can go back to the lower time frame. Like I just said, look for a change of character, which we got right here, a change of character. Okay, so you can look for a change of character. This is a change of character right here. You can then look to map out a point of interest where you can get an entry and look to trade the pullback. Okay, you can look to trade this higher time frame pullback. Sorry, my chart is a little bit messy, sorry about that. So you can look to trade this reversal, and you equally have a higher time frame point of interest right here. So what you can simply do is you can wait for price. You remember you got a trading opportunity trading this pullback. Okay, so you can equally wait for price to mitigate a higher time frame point of interest. Okay, so this is exactly what you should do. And what I want you to note right here is that you understood that price was in an uptrend. You try to get an entry and you trade this pullback to the downside. So the higher time frame is giving you the directional bias. You understand where price is moving to and what price is likely to do. Now the lower time frame, you understand the black, which is your lower time frame. You understand where price is pulling back to and why price is pulling back. You understand everything. Now you see a higher time frame point of interest, and over here is where you need your lower time frame. Okay, remember the black is your medium time frame, the red is your higher time frame, and at your zone is where you go down to your lower time frame to look for entry confirmations. Okay, you move to your lower time frame to understand and look for entry confirmation, and you look to trade to the upside in line with the overall trend. Okay, when you get your entry, right now we are trading with the higher time frame because you understand the higher time frame and the lower time frame, even the medium time frame, all of them are in line right now because now everyone will be looking to go long from this area. Okay, so this is simply what we'll be doing. So we'll be going to a price chart. Let me show you few examples. And firstly, what we'll be doing is to understand, what I'll be showing you is to understand what price is doing and why price is doing that. This is what I'll show you on the price chart right now. So if you look, this is Eurocard price charts and we are on the daily time frame. Okay, this is the daily time frame. You can see price has been in a downtrend, and over here from this low you see price starts to push to the upside. Now we are in an uptrend. So if I try to zoom in and see the price action right here clearly, what you can clearly see is that we have a push to the upside, price push to the upside. Here is the pullback, a continuation, a push to the upside. Here is another pullback and a push to the upside. Here is a pullback and a continuation to the upside. Now we're getting a new pullback. So like what I just explained, you see this move here on the higher time frame, which is our daily time frame. So I'll be analyzing this as, let's say, as an intraday trader. Okay, I'll be using the daily time frame. After the daily time frame, I go back to the 2 hours time frame, and if looking for entry is necessary, we'll go to the 15-minute time frame for our entry. Okay, so what you can clearly see, we are in a daily time frame and you see price, a push, a pullback, a push, a pullback. Like what I just explained, this push and pullback you are seeing right here on the daily time frame, this is a trend on the medium time frame. Okay, so let's go ahead and map out the market structure. So here is the push, and here we get a break of structure to the upside, and here is the low. So I have to map out this low. Let's use this circle for the highs and the lows. So here is our low and here is our high. We equally have equal highs right here, so let me place it right here. Here is our high, here is a new low. Okay, here is another high, here is a low, and here is another high. So we'll be marking out this break of structure to tell you that price continued to push to the upside, and over here we have another break of structure to the upside. So you understand exactly what price is doing on the higher time frame. Price is totally in an uptrend, and over here you can see price is now pushing to the downside, and I will equally show you how you would have anticipated this pullback and how you would know that price is actually going to pull back. I'm actually recording this video on 24th of March and I will release it on the 25th. So after watching this video, you can go back and see it exactly for yourself on the price chart. You will see it for yourself. This is our higher time frame and we are able to read the higher time frame structure. So what we should do right now is to go to our medium time frame, which I said I'll be using the 2 hours time frame. Let's see what is happening over there. So you can clearly see it. This is the price action we mapped out there on the higher time frame, and you can clearly see that this is a trend on the medium time frame. Price is trending to the downside. You can clearly see it. You can see price breaking lows to the downside. This is very, very clear. Price is breaking lows to the downside. This is a trend on the medium time frame. So why price was breaking structure to the downside? Remember how I told you to catch a trend reversal if you actually want to catch a trend reversal. At this point, price was actually reacting from a higher time frame point of interest over here. Okay, this is a point of interest, even though price spiked below it. But the most important thing I want you to understand is that I said if you want to catch this trend reversal, what you should be able to do is identifying a change of character, and from there you see that price is about to change direction. So we have a break of structure to the downside. Over here we have a break of structure to the downside. So this is the most recent low. Instead of price to break, you see price spikes below the low and it closed back inside. Price wasn't able to close below this low. So this was the most recent high that formed this low right here. Okay, so this is our chalk high. This is where we got the change of character, and we have a point of interest right here which we'll be looking to trade from. But what we actually see right here is that price spikes. Okay, you see that spike. So this spike wasn't able to let us get into a trade, but you see from there, you see price change direction to the upside, and you can see from there price starts to push the upside. It continues to push the upside till we get this break of structure. Price breaks the daily time frame high before we start seeing another pullback into this area. So now that price broke structure to the upside, what you can clearly see from here is that price breaks this most recent low. You see price was breaking structures to the upside. Now price took out the higher time frame high. Okay, price takes the higher time frame high. Now we have a change of character right here. You can actually go there, map out your point of interest. You map out your point of interest and you can see how price returns back, taps into your point of interest, and now you see price pushing to the downside. Okay, so this is the simplest way you can catch trend reversal by understanding top-down analysis. So I'm going to show you two things right now. The first thing is to show you how you can actually catch a trading opportunity by understanding what I just explained right here. Firstly, let's go back to the daily time frame. So on the daily time frame, what you can clearly see, so I will cut from this area, we look for a point of interest, and I will show you how to catch a trading opportunity with top-down analysis, and I will quickly show you how you would have caught into this pullback if you wanted to take a trade from there. Okay, so this is two things I'll be showing you before I end this video. So this is the daily time frame, and what you can clearly see on the daily time frame is that price pushed to the upside and we have a break of structure right here. Let's go to the 2 hours time frame. Let me show you what we have there. So this is the 2 hours time frame, and I think I have to take price back. So taking price back to this area. So what you can clearly see right now is that, you know, price mitigated a higher time frame point of interest from this low and price is pushing to the upside. Now we have multiple break of structures. If you try to map them out, we have break of structures at this area. We equally have another break of structure at this area. So what you should do right now is to look for your zones where you're going to trade from. So we have a point of interest at this area, we have a point of interest at this area, and we equally have another point of interest at this area. We have two areas which we'll be looking at. So at this area, what you can clearly see is that price is pulling back, and what we are looking to do right now is to trade in line with the trend, because the higher time frame is in an uptrend. Now this lower time frame, price is trending to the downside, and we'll be looking to trade to the upside in line with the higher time frame. So for me, this second zone is a high probability one for me. It has a higher probability. Firstly, you can clearly see price swept liquidity at the downside. Okay, price takes this low with this candle right here. So if you actually know how I map out my high probability order block, you will understand that this is a high probability setup for me. Price is literally returning very aggressively to this zone. So the best thing to do if you want to trade from this zone or these areas is waiting for an entry confirmation. Okay, wait for an entry confirmation. So let's play price forward and see what we have. Now you see price blast through this zone. Okay, price blast through the first point of interest, and now we are getting a reaction at the second zone. Price is in an uptrend on the higher time frame. Now on the medium time frame, price is reacting at our zone, and we'll be looking to trade in line with the higher time frame. So what you should do right now is go into the lower time frame to look for your entry confirmation, which I have talked about, but I won't actually go to the lower time frame right now. So let's see how price reacts. Now you see price pushing to the upside, you see the reaction, a little consolidation, and now price starts to push to the upside. Now you see price push back, clears the liquidity after this consolidation. So what you can see now, price respected that zone and price sweeps the liquidity at the higher time frame high, and you see price continues. Here is the break, because firstly price spikes, pull back, and now a clear break of structure to that high, and now we are getting a pullback. So if you actually want to catch this retracement to the downside, okay, because we have a break of structure right now. Price breaks these higher time frame points of interest, and you want to catch this retracement to the downside. Just like I explained, you should be able to identify your high and your low, okay. So you should look for the change of character. So what you can see is that we have a break of structure to the upside, which is very clear. I have to zoom in a little bit, or should I go down to the 1 hour time frame so you can actually see the price action very clear, okay. A high right here, so this is the break of structure, and here we get a change of character, and this is exactly what I'm explaining to you in this video. So this is a current price action. This is what is going on right now on the price chart. We have a change of character right here, and you can actually go ahead, map out your zone, and you would have gotten an entry even though price failed to tap us into this trade now, okay. So if you go down to your lower time frames, you will get more opportunities to take this trade. But what you can clearly see is that price has changed direction, okay. Price has now changed direction on the lower time frame. This is a trend. Like I said, every push you see on the higher time frame is a trend on the lower time frame. So this is actually a trend on this lower time frame, okay. This is a trend on this lower time frame. So I won't be surprised if price actually returns back, mitigates a zone right here, or this upper zone, and continues to the downside, because what we know is that price breaks a higher time frame point of interest, and we will be expecting a serious pullback before a continuation to the upside, okay. So this is how it is, and I hope you understand exactly what I explained. So with all this being explained, I hope you can actually do a top-down analysis and understand what price is doing across different time frames, okay. So that is it for today. Thanks very much, and see you in the next one.